Good morning, everyone, and thank you, Gabe and Cherish, for the opportunity to be on the call today.
Hey, girl.
Good morning.
Hey.
Okay, so I'm gonna, like he mentioned, I'm gonna go ahead and I did two separate presentations. I did make them as short as possible because I want to do hands-on. So after we're done, if you guys have any questions, I'll be more than happy to answer them. I have been in the industry as a broker. I'm a broker now, but I've been in the industry as a lender for 8 years. So any questions, anything I can do for you guys, I'm definitely here for it. So let me, do I go ahead and start? Do you have to do like a screen share so I can pull up the slides or?
Yeah,
We made you co-host, you can share.
Go ahead.
And Anna, if we have questions, do you want us to hold off on questions till the end, or do you want us to ask them as they come up?
It's totally up to you, however you want the meeting to go.
All right. I like interactive on the spot. So if you guys have any questions for Anna, let's jump right in. I know I'll have a few.
And then for what I do, just the share screen, right?
Yes.
Okay. So let me. Okay, so we will start with the the loans, like what loans are available. I know that we do have some seasoned agents on the call, so definitely bear with us. I'm going to go through it like very briefly, but there is also a lot of new agents, and I do feel like it's super important for them to have some knowledge on what products are available, especially because as new agents, a lot of them work with first-time home buyers. So I will get started with that, okay? Okay, so that's actually myself. Like I mentioned, I've been in the industry for 8 years. I am actually a licensed mortgage broker, and I am also a licensed broker for the real estate side. I do focus on the lending side by supporting my team members and other agents that I work with their loans. So the first one, and it's probably one of the ones that you guys hear the most, that's very popular, it's going to be your FHA loan. This loan is great for first-time home buyers and also people that are looking to purchase multi-units. With an FHA loan, you could do from 1 to 4 unit properties, and you will still be able to purchase those with a 3.5% down payment. So the requirements for the loan is 3.5 on the down payment of whatever the property cost. So if you're dealing with a client and they want to know what's the down payment, you're just going to multiply the purchase price times 3.5, and that's going to give you how much they need in dollars. The requirements for the loan, this is for owner occupied, so no investments. You can purchase a single family up to a 4-unit property. The requirement on the credit score is 580. And one really cool thing about this is that there is no income limit. So some other loans, they do limit like how much you're able to earn in order to obtain those loans, especially for like large loan amounts. So FHA loans actually don't have those requirements. And one thing I did put in red, one thing that's super important that I do hear a lot about FHA loans. It's super important to know that it's a product that is great for first-time home buyers, but it is not exclusive for first-time home buyers. So if you have a client that's selling their property and they have an FHA loan and tomorrow they want to obtain another FHA loan, that's perfectly fine. They can actually do that. And before I move on to the next slide, does anyone have any questions on the FHA loans? Yes, no?
Sorry, I have one question.
Yes.
If they're married, like let's say if their previous partner has purchased a house before, do they have to, can they still qualify for FHA or no?
So it all is going to depend on how the previous property was taken. So if someone is legally married and they did go or their partner, it comes up because when people are married, we do look at both of the financials for both spouses, whether they're going to go on the loan or not. So if it comes up that the other person has an FHA loan, they are not going to let you obtain a second one unless there is certain circumstances, like if you moved far away. They'll do let you like more than 100 miles or you got relocated because of work, situations like that, they won't let you. But if you're still legally married, There could do like, the only thing that I can think that could possibly be an exception is like, if you're getting already a divorce and the property is gonna be like, the other person's gonna keep it, and you can prove that the other person is the one making the payments and your second position on the loan, then that is possible. So there's some times where people could have two FHA loans, but not when they truly both belong to them. And then that's actually, Crystal, that actually gives me the room for another really a good point to bring up on FHA loans. If one of your client is buying a property with multiple borrowers, right? They have a co-borrower. It's just important for the main borrower to be placed in first position on that mortgage, because in 12 months, the other borrowers, whether it's 2 or 3, all of them will qualify for an FHA loan again. Does that make sense, like the way I'm explaining that?
So so I just want to make sure I understand that. So if I have a client who wants to buy a house, they're a first-time buyer, and they have like friends and family who are willing to co-sign for them, or family that want to co-sign for them, what you're saying is the co-signers who co-sign for my client, they can qualify for an FHA loan after 12 months.
That is exactly the way it works.
Okay. All right, cool. So
12
just
months, and then they're able to, and that's something super important, because I know especially in today's market, a lot of people need more than one borrower to qualify because of the prices, interest rates, and income. And a lot of times when our clients are looking for someone to help, I feel that one of the biggest objections I get is like, they don't want to, because they think that when they purchase, they're not going to be able to, or like it's going to affect them. So I always offer to get on the call with those clients and explain to them how it's not. And I'm always very honest about like everything I do. So I do always let the clients that are potential co-borrowers know, if they're looking to purchase in less than 12 months, then they shouldn't do it, because it's a bad idea. But if purchasing is not something they're looking for immediately or within that 12-month time frame, it does not affect them at all.
yeah, that's one of the biggest objections I get with co-signers, is that they're afraid of they're not going to be able to qualify for their FHA benefits.
That's
They're
right,
like, well,
exactly. Yeah,
okay.
so they do, which is pretty cool. So yeah, so the most important thing, you know, when working with myself or your lender, is that it's important to understand your client's situation and really understand who's truly the owner of the property, who's the one that's going to be making the payments, to make sure that the positions on the loan are in the right place, because it does matter. I've unfortunately ran into situations from other lenders where I have a client that's wanting to purchase and they can't because they were placed in first position when that should have never happened. Okay, so I'm gonna switch to the next one, which is the exact same product. Is gonna be an FHA loan, and the only difference with this one is that it's with a down payment assistance. So we do have a loan with the banks where they can borrow the money for the down payment, and it does get paid back in a 10-year period. So the clients at this point would have a payment on their first mortgage, and then a payment for that down payment money that was borrowed. And at this point, then the client would only be having to pay for closing costs unless the seller pays for that. And it's the same requirement, 580 credit score for that. And they allow 1 to 2 unit properties.
The difference is that you just, so sorry.
Go ahead.
The difference is that you just pay more monthly, right?
That is correct. They're gonna have 2 payments now. So instead of one, this one actually requires monthly payments on the second loan for the down payment. So now their monthly payment overall is going to be higher. That's correct.
Okay.
Yes. And then we're going on to the next one, which is going to be a VA loan. This is definitely one of my favorite loans, and that everyone should know when they're talking to like military families or like active military. So the VA does provide, for me personally, my opinion, the best loan option out there. When the veterans qualify, they will be able to purchase their property with 0% down payment. They don't have to pay mortgage insurance, which is a significant expense on the monthly payments. There is actually no minimum credit required for VAs. Most of the banks require 620, but it's basically up to the bank. The VA does not actually have a minimum requirement for credit score set. And then it is up to, they do also allow you to finance single family up to 4 unit properties. But I will definitely say for a VA to be able to own a multi-unit, it is more challenging because they do ask them for additional requirements like having a history of being landlords before, and most of the time that's not the case. But so this is very popular primarily for like single family property. But on VA loans, I mean, when I've like financed them, a lot of the times if they get money from the seller to cover closing costs, this is a loan where people can truly purchase a property with zero to no money out of pocket. And their rates are still very competitive. And it is also like with the VA, the other really cool thing is that they're super lenient. So even when someone has a low credit score and that you probably potentially can qualify for a conventional loan or an FHA loan, we have a high chance that you can get a VA loan. And then one other thing, because I actually forgot to add it on here. So one really outstanding thing about the VA is that they do not have an actual debt to income ratio, meaning how much you can borrow against the money that you earn. They're the only one that doesn't care about that. So if you're gonna use 64% of your income towards your house payment and VA gives us an approval, then we can basically finance you for that. The highest that I've personally seen an approval on is above 70% of the person's income, and they would still get an approval.
I have a question. So here in San Diego, we have a really big military presence, and we have people that have been enrolled for about a year, some 2 years, some have done 4 years. Other people who are not active duty, some that are retired. So how do they all qualify just because they're enrolled, or are there special, like, do you have to be enrolled for a certain amount of time, discharged a certain way? How does that work?
Yeah, so they have to, they have to have the benefit available, which is made available when they have to be discharged honorably. And then for the service, there's requirements for that. I believe it's 180 days of active duty. And then if they're doing like the reserves, they have like different requirements for that. And once they serve, like if they actually are actively, they serve in a war, then automatically the benefit is available to them. So there is certain requirements. But whenever you talk to like a veteran, I do have like a website that I can share with any of you guys or with the clients directly that they can check to see exactly if they can find out for sure if they have the benefit available. Using their DD 214, which is a paper that they basically have, like a document that they own as military, as being part of the military.
Oh, yeah, okay. So there's different, so if someone's active duty, 180 days, they get it. If you're honorably discharged, you have it. And then if you're in the reserves, the special requirements as well.
That's right. Yeah. So it's available. So most of the time, as long as they're like they've already done some duty or they're honorably discharged, it is available to most of them.
Okay. So just
Yes.
the reason I'm asking is because I want all of you on the call. You're gonna have your military client, and this is popular in San Diego. So I just want to let you guys know what we do over here. I don't work with a lot of VA clients, but I do occasionally here and there because I just don't market to those people. But what we see a lot of over here is that you'll have people that'll get stationed here for 3 years, and they'll have their access to their VA benefits. But what we've all noticed is that a lot of them don't even know the full extent of their VA benefits. A lot of them have no idea how it works. And like Anna said, in my opinion, VA is the best loan in the world, probably even better than cash. Has all this bunch of benefits. So you want to overeducate your VA clientele. And then in San Diego, what a lot of people do is they host seminars. They get their VA clients enrolled, help them buy a home. And then in 2 or 3 years, when they get redeployed elsewhere, they either put the house up for rent and they keep that property, refinance out of the VA into a conventional, and they get to use the VA benefit again. Is that how it works, Hannah?
That is exactly how it works. So once you own a VA, once you have a VA loan to your name, and then like you mentioned, you want to move somewhere else because they do get relocated a lot, they just have to refinance that property out of the VA loan, and then they would be able to they go through the process of making the VA loan available again. But yeah, they can use it. And they actually have like a benefit because of housing pricing right now. Most of the time they can only use their benefit once. But if they were to buy it in a state where like the the housing price is like really low, it could be that they can use their VA benefit. It could be enough to cover more than one property.
So now I want you guys to start thinking, how many people do you know that are in the military that don't own a home? How many friends and family do you know that are in the military, don't or retired and don't own real estate? You can literally help them buy a home with no money out of pocket and then negotiate. This is a really good strategy. If you really want to work with buyers right now, help people in the military with their no down payment and then negotiate 1% with the seller for their closing costs, give up 1% that you have and take 1.5% only on the deal, and you can start helping. You can create a program, call it whatever you want to call it, the Des Moines, Iowa Veterans Program, where you pay no money out of pocket to buy a home, no closing costs, no down payment, and the closing cost gets covered by you and the seller. The down payment gets covered by the VA, and then you become the VA expert, and you get all those deals. I'd rather take 1% of something than 2.5% of nothing.
And there is, before I go to the next slide, I definitely want to let you guys know that there is a lot of benefit and a lot of VAs that might already own a property and didn't use their VA benefit because, like he mentioned, sometimes they really are unaware of it. And other times, if they buy it with a partner and they're not married, the partner is not allowed. So the VA does have a very strict requirement that only veterans can go on the loan together or spouses. So sometimes people right now could have a home and they didn't use their benefit. So even when you talk to someone and if they're military, like don't assume they used it. Maybe they still have it available and they can purchase a property with a 0 down payment.
I have one question. How fast do these close? Like, do these loans close?
So for me, aside from if we get like a third party involved, like the state with like a down payment assistance, all the loans for through me personally, because we are brokerage, they're handled normal. So we can close loans between like 14 to 30 days, and our average is about 20 days on closings. So for us, it's completely normal. With the VA loan, the only delay that you could experience is your appraisal, because we don't have control over the appraisal. The veteran affairs, actually, it has to be someone that's certified by them. So sometimes that takes like a couple of extra days, but nothing to where it should affect your closing time periods. It's a regular process, because as long as you're working with a lender that that has the authority to do these loans, it's basically, it would be like exactly like processing an FHA loan.
I have a question. If there's a husband and wife and they're both in the service, and then let's say the husband uses the VA loan, can the wife use her VA loan, or does that count as one?
So they each have their own, and usually they would choose like which one is going to be using it. That's what I did for one of the military families I helped recently. And then when using the next one, there will most likely be requirements, like why they're trying to buy another one, like maybe an upgrade. So they can't just buy two because it is owner occupied. So they want to make sure that they're going to occupy it. But yeah, even if they're married, and if they're both in the military, they will not lose the benefit. It'll still be available for the person that doesn't use it.
I also have a question. And now who can actually be a part of the loan aside? I know you mentioned the wives could be a part of it, but now is there anyone else that can be like a co-borrower to a veteran?
So VA loans will only accept spouse, so husband or wife, and other than that, they will accept other military members to be on a loan together, and that's it. They won't accept any family members, no friends, nothing outside of military or spouses.
Okay, thank you.
Yeah.
And then
I have another question.
Oh, go for
I
it.
have one more question. So you said that there's no income limit, there's no pre-approval limit as long as they can qualify. So as long as their income and debt, then they can get approved for however how much that allows them to.
That's
Okay, but let's say they're interested in buying a multi-unit, like a duplex, a triplex, or a quadplex, and they don't qualify for it with their own income. Can they use the rent from the other units to help them qualify?
So it is allowed, but this is one where I mentioned where that is allowed because it works very similar to an FHA loan. But when they are trying to use rental income from the other properties, the other units, they have to have history that they have previously been a landlord. So if they have never owned, they will not be able to. And that's super important to know, or they require, they need to be previous history of being a landlord, or more specifically, even if they can prove that they've done property management. So even if they don't own, but they can, they've legally done property management, then that would be acceptable. And it's super important, because like, just like, for example, like when I was in the industry, we don't know everything as lenders or, as agents. So I share this like super important things, because when I found out about the requirement for like the veterans to already have history of being landlords, or having history of being, sorry, I lost the word, of property management, I actually found out because a colleague of mine lost the deal. They had to cancel an escrow with an agent they had, because they gave them rental income without really reading through the guidelines, and they couldn't close it because they didn't allow them to use it. So for me, that's why I bring up like anything that I learn, I like to share with other people, because like for me, like my number one goal is always like never tell someone that they're not going to be able to get the property you cut them into escrow. So these are really important things for you to know as an agent. You can always question your lender, like, are you sure we can use that income like on a VA? Because they do have special requirements for using rental income. It is permitted, but they have to meet the requirements for it. And then, does anyone else have any questions on the VA loan before I switch to the next one?
No, can I add a quick little tip here? Because I'm a veteran. Just for the group, for the realtors, the misconception is that you can only use your VA loan once. I've purchased multiple properties with zero money down. So the question was, is there any loan limits on your first property? There is not. But on your second one, you have to pull what's called a certificate of eligibility. Make sure to write that down. The lenders know this, but they'll be able to see how much eligibility they have from their certificate of eligibility. And a strategy as realtors, you can connect them with a lender to have them refinance out of their current mortgage. They can do a, depending upon the interest rates, refinance into a conventional FHA. And this is the key of how veterans become millionaires and create generational wealth. What you want to do is you want to know what the rank is, number one, and go on www.va.gov and see what their basic housing allowance is. So if it's an E7 and he's stationed in San Diego and he's getting $4,000 a month, it's called basic housing allowance. That money goes away. That money goes to military housing. So they're not creating generational wealth because they're giving that away to the government. So the way for you to get in with the veterans is to educate them on how they can transfer that $4,000 or $4,500 a month that they're getting and get into a loan, become a property owner, becoming a real estate investor. Because when they get orders to their new duty station in 3 years, they can use their VA loan again. And all you do is rinse and repeat. If you get the young guys that have only served 4 years, 5 years, 6 years, by the time they reach 20 years in the military, they can have 5, 6, 7 properties.
That is correct. And thank you for that.
Hey, Anna, one more thing. I know like once we're in escrow, I kind of learned this the hard way, but once we're in escrow, like the veterans or the military, they cannot pay for anything, right? So like if I know termite has to be done, and if the seller kind of says they're not going to do it, I learned because I didn't know that when I first started, and I had to come out of pocket to pay for the termite myself because the veteran isn't allowed to pay for it, correct?
That's correct. So there is actually like a full list of they call them VA non-allowables, which is basically a bunch of fees, a lot of them, not all of them, but a lot of the fees that a veteran cannot legally pay for. So when dealing with VA loans, I always do highly encourage like the agents. I let them know they have to have, if they can get full closing costs, then that's going to solve all the problems. But if not, we usually do calculations to let them know like what is the very minimum that they will need to collect from the seller to make sure that it's enough money to cover the VA non-allowables. And in my experience, when I talk to like the listing agents, because I'll usually call them like about the transaction, I will explain to them like we need the money because we need to cover the VA non-allowables, even if our veteran has the money to cover their own closing costs. And that's actually a great point. So right now, Crystal, they did change that regulation very recently where now they're allowing the veteran or the agents to pay for the termite report. But you're right, before they could not pay for it. Now they are allowing it. But then there is a lot of other things that they will not be able to pay for. So if they're not negotiated, then you basically have to go back and renegotiate or pay for it because they won't be able to. That's correct. That's a great point.
That's a good point, Crystal.
That's
So
a-
just to recap on that, so you're saying with VA clients, this is important for all of us to know. With your VA clients, on every offer, there is a mandated Section 1 termite clearance that has to happen. You have to get a termite clearance on the property for VA. And from what you're saying, the agent can pay for the termite clearance, the seller can pay for the termite clearance, but the borrower, the VA client, they cannot. Is that right?
So they
That's
just
correct.
changed it where they are like allowing it, but then it's gonna be up to the lenders. So I mean, overall, that's basically like you should just assume that they're not gonna be able to pay for it.
Got it, got it. And just to clarify what that means exactly, that means that the VA guidelines say, yes, the borrower can pay for it, but the lender might have their overlays on it and say,
That's right.
well, we're not going to allow that.
Right, and then because it's been something that changed like recently, like just months back, it was like they can never, like no one would allow for the borrower to pay for it. And that's just like an example of it, like the one that Crystal's mentioning, which is a great point. But there is a lot of other costs. It's actually it does usually add up to a couple $1,000s in fees that the veteran cannot pay for. So it's always best if you can negotiate a seller credit. And like I mentioned, like, you know, with the other guy that was talking right now that was helping us out and giving us information about VAs, I feel like a lot of it just has to do with like informing and being able to like communicate that between agents. Because, you know, if you're negotiating with an agent, maybe they don't even know that that's a requirement as well. So I feel like once you explain it, then most of the time they understand that it's not even like you just need the money, like, but it's an actual requirement in order to get that deal to the closing table.
Can I share a strategy that I use to get my offers accepted? I deal with nothing but veterans, and there's a big objection with listing agents not accepting VA loans or the veterans because of the termite clearance. So what I have done in the past, so there was a property that obviously had termites. So I negotiated with the realtor that I was going to cover the termite clearance because the veteran cannot be charged any fees for that termite clearance. So I got my termite guy to go in and give me an estimate. It was $1,500, right? So I put that in the contract. Obviously, we did the negotiations with the realtor just to allow that veteran to get first head of line privilege for that property, and just through communication and me giving up a little bit. And it was a 3% commission on the buyer side. So I gave up $1,500. The repairs were done, and then the veteran got into the home. So yes, you got to give a little bit to get, but it's a good strategy because that's one of the main objections that you're going to get from another agent that's experienced with VA loans. And knowing that if that property does have termites, they know they're not going to get a termite clearance report, and then it's going to cost the seller. So you can just fork up some money and say, hey, I'll cover it. That's a strategy that's worked for me. Might not be something that everyone's willing to do, but it's worked about 3 or 4 times with me.
Got it. Thank you. Okay, so I'm gonna go to the next slide, which is your conventional loans, which are, you know, these are super popular. I'll start with the 3%. So 3% conventional loan is available for first-time home buyers. So the requirement for the 3% is that the buyer cannot have any ownership in the last 3 years. They have to be a true first-time home buyer. The requirements on a conventional loan is going to be 620 credit score and above. With a low down payment, it does require for it to be owner occupied. There is no income limits on it. And the best thing that I see that you should be pushing for on conventional loans is using a 5% conventional loan to upgrade your clients. So a lot of people have, even though there's like a gazillion amount of TikToks and whatever, like clips saying that you don't need 20% to buy, people still do believe that. They think that you need to 20% or more to buy your second property, which is a myth. Any owner occupied, if they already own a property and then they're trying to upgrade, they can actually upgrade and keep the property they have with the down payment as low as 5%. So definitely remind your clients about that, because a lot of people sit there and save and save and save, not knowing that all they need is 5%. And when you use a 5% conventional loan to purchase a property, then they can always use the rental income from the departing home. So that's also additional income that they'll be able to use to qualify. So this is, I would say, like one of the most popular for property upgrades, like when they're ready to upgrade their home. Do you guys have any questions on the conventional before I switch? Okay, let's go. And then your conventional 20%, which is just like the one I mentioned, it's just a higher requirement. So people use a conventional 20% when they don't want to pay for mortgage insurance. It is going to make the payments more affordable. And you can also use it for an investment property. So if they want to do like a single family, they can do it with the 20% conventional loan. One thing that I do definitely want to say about, like, you know, the conventional financing or mortgage insurance more than anything. Most of the loans, there's very, very few like times where you will be able to have a loan with less than 20% and not have to pay mortgage insurance. So that's one really big thing. People call it, you know, like mortgage insurance or PMI, which is, you know, similar. It's a cost integrated into the loan for the mortgage to cover the mortgage. So if anyone purchasing the property, if they're doing less than 20%, they will be paying for mortgage insurance. And I say that because some people think that if you go conventional, you're not going to pay for it, which is incorrect. It's based on the down payment. 20 or more upfront eliminates it. Otherwise, if you buy with less than 20%, you have to wait until your property builds the 20%, and then you're able to remove it by doing a refinance on an FHA loan and by doing an appraisal potentially on a conventional loan. Yes. Does anyone have any questions on the conventional? Okay, awesome. So the next one is the I-10 loan program. So we do have loans available for I-10. I've done a couple. I haven't done like a whole lot of them. Maybe I've done like 6, 7 throughout my career. And the program itself is great. The requirements on down payment are higher. And a lot of times as first-time home buyers, they're not able to meet the requirement. But an I-10 loan is basically a loan that is given for people that just have the a number that's provided by the IRS to file their tax returns. So they can actually purchase a property legally with it. They're going to require minimum 15% down payment. They usually require 6 months of reserves towards their monthly payment. You have to have a minimum of 2 years with your I-10 number. Your I-10 number must be valid. And they do require at least 12 months of you having credit under your I-10 number. Credit score required is 680 or higher. And even if they're self-employed and they run like a business, they can do it because we also have a bank statement program for I-10. Is everyone does everyone like kind of familiar or has heard of like I-10 loans?
That was gonna be my question. If we can clarify what I-10 is and who that's for.
So let me
Like,
actually
who that is.
So let me actually see what exactly.
Yes.
We just say I-10. Like
Yeah, because I want it'd be good for everyone to know, because I know in San Diego we have a lot of people who are here illegally. They don't have a social security number, but they have a tax ID number, like you said, and they file taxes. They're just here, you know, illegally. So
and that's exactly who it's for. So if they have the I-10 stands for the individual taxpayer ID number, which is a number just like a social security. It's a 9-digit number that is assigned by the IRS, and it's exclusively assigned so that they could pay their taxes. Because even if they're here illegal, we still want them to pay their taxes. So now they're giving them the opportunity to be able to purchase a property with that I-10 number. So like Gabe mentioned, most of the time they're going to be here illegally. They don't need to have like a valid visa or anything like that. We just base it off the I-10 letter from the IRS.
so there you guys go. Theo can purchase a house.
Yeah,
Come on, guys.
Yes.
Deposit your deals and getting everyone a house. Everyone's getting a house this year. You get a house. You guys gonna be like Oprah. You get a house. You get a house. You get a house.
Really quick, Anna, do you know the requirements to get an I-10, like the process of that?
Oh yeah, so it's actually really simple. They can do it themselves, or a lot of times when they're gonna file their tax returns, their preparer will process that for them. And it's like an application that is sent into the IRS, and then they issue the ITIN letter, which is instead of having like a social security card like us, then they'll get a letter with the ITIN number on it, and that's basically like the equivalent, and that's what's used for the transaction. So if they're filing taxes already, most likely, like their tax returns, most likely they already have it. And then if not, their tax preparer can usually help them process that.
Got it. Thank you.
Yes.
Anyone else have any questions for Anna about the ITIN? This one's really big, especially in Latino community. Huge, huge, huge. So if you have friends, family members, or you just know people, maybe you have maybe you have someone who does landscape at your property. They're here illegally, but they have like 20 houses on retainer. They're making good money, and they don't even know they can buy a house because they don't have a social security number. Like, these are the people you got to start thinking about, who are cash rich, that keep mattress money. Obviously, there's a way to get the money legally in there, but this is what I'm talking about. You want to start thinking about these people. And Anna's giving us some really good info, so you guys can start identifying buyers in your network and be like, oh, the challenge that I know from coaching is that most of us have a certain type of lens that we look at real estate with. And it's not until people like Anna come along and like, no, you can look at that person differently because they can qualify. That's what Anna's doing for us today. So I want you guys to start thinking about that. Any questions for Anna about the I-10, you guys?
I have a question. Hi, Anna. So
Hi,
when
go
you
ahead.
say that they're illegally here, is that people that, one, have no papers, and then two, they just stayed here with a tourist visa? So it
That's
could be
correct.
either or.
Yeah, that's correct.
Mm-hmm.
Like, we don't basically question like the status for it. Because for your regular programs, we're gonna ask if you're like a citizen or resident. That is part of the application. For the ITIN number, that's not gonna matter.
And if
That's
so,
great.
if they have no papers, or if they have a visa, a tourist visa, they have an ITIN if they paying for
So as
taxes.
long as they have the ITIN.
Yeah, so status doesn't matter. What matters, if they have no status and they have an ITIN number, which is a tax ID number, which allows them to pay taxes, that's all that is required.
Mhm.
That's correct. And
And
like
if they have a visa, then they also can get an ITIN number.
so when it comes to like the tourist visa, like that one is kind of like, I mean, when they have a tourist visa, they're supposed to like get out of the state. So for example, like us, we're not going to get involved with that. Now, can they really process their ITIN? Is the IRS going to issue it for them? They would definitely need to talk to like a tax preparer about that, or the IRS directly. Like for us as a lender, if they're able to obtain an ITIN number, if the IRS issues that for them, that would make them eligible for the program.
Hi, Anna.
Mhm.
I have another question.
Yeah.
So like, let's say if it's like a married couple, or if it's a couple and one of them has an I-10 and one of them is, from here, well, would they have to use the I-10 program, or can they, because one of them is from here, can they use like the standard FHA program?
Okay, Crystal's giving us all the nuggets today. Okay, Crystal.
That's a really good question.
Yeah, that's a great question.
These are
That's
good scenarios that I go
Yeah,
through.
that's actually a great question. So, the minute you introduce an applicant, regardless of how many that has an ITIN, it would automatically convert the loan to an ITIN loan. In situations like that, because the requirements are so different, a lot of times I will try to qualify the one that does have like, that has a good standing status alone, so that if they don't want to pay for like the larger down payments. But yeah, the minute you mix them, it will still become like, the banks will always go with like worst case. So the minute you mix an ITIN with like a resident or citizen, you do have to go with the ITIN program. Like those would kick in.
Thank you.
The other thing for ITIN is that when they own a property under ITIN, they can actually purchase a second property with an ITIN loan. I actually have a transaction that I did at the end of last year. I did my clients purchase their first property like maybe 5 years ago. And then they purchased like, their first like a stepping stone. And then now they purchase like what they would consider like their dream home, a very nice property upgrade. And they did both with an ITIN loan. So like Gabe mentioned, I mean, like there's people out there that are running really huge businesses, and maybe you don't even have any idea that they have an ITIN. and they haven't purchased a property thinking that they can purchase. Like for my client specifically, he is earning close to 2 million in gross, like per year, in like in the business that he has. So he was able to purchase like his second property. So it's just, you know, like I'm not saying it's gonna be for everyone, because one of the biggest challenges is the down payment, but there is definitely people out there that you talk to that haven't purchased, thinking that they are not able to. And also be aware that this item stuff is pretty new, maybe within the last 5 to 6 years, and there's still a lot of banks that don't offer it. So for us as brokers, we do have banks that offer it, but there's a lot of times that, you know, the client could have gone into your regular Wells Fargo or Chase and they've been denied because they don't provide it, but that doesn't mean it doesn't exist. Because each bank does have, you know, their own products that they offer.
This is really helpful and really big. And a quick question, just for the sake of time, how many more loan programs do we have? Because I think what might be best is, in my opinion, this has been super helpful and been a big reminder for me. And I know a lot of people are taking notes. I can see it. We would like to have you back on a part 2 to talk about the milestones so that we can really focus in on that. Do we have
Well,
a couple
I would
more
actually say for sure. So I would say, yes, Gabe, because honestly, I thought I made it like brief, but it's still kind of long. So there is actually there's 2 more slides, but then I definitely don't think we'll have time to go through the actual process or like what happens like during the underwriting, like the once the file is in escrow. So I do think that we won't have enough time for that.
So then, Cherish, can we just bring her back for next week for part 2? And just for everyone on the call, I want to make sure that
Or maybe
Anna...
the week after, because then people are gonna get bored. I know that loans are boring, guys. But I love them. But I love them, okay?
Well, I'll tell you this, like I'm looking at everyone's screens as you're talking and everyone's nodding their head, everyone's taking notes. So if you guys can do me a huge favor and just give Anna some feedback, like maybe a big takeaway, letting her know if this was helpful, because I know from a presenter standpoint, like it's good to get some feedback on all this. And I'll tell you right now, Anna, what you presented today was so freaking good. I needed to be reminded of the I-10 because I'm not thinking about these people. And I keep on forgetting that, yeah, there's programs out there that can help them and I have to talk about it. So, I mean, you can just see it in the chat right now. Very helpful. Thank you so much. Like, Anna, you crushed it today. Thank you so much for taking the time. And you guys, listen, one big way that we can really repay her is 2 ways. One, of course, tag her and give her a shout out on social. But if you have any clients that you feel might be a really good fit for her, someone that, you know, Anna's bilingual, she's been in the business now, she's a broker as well on top of it. So if you want someone experienced and you feel she's going to connect with them, like take your leads and your clients over to her. She's part of the winner's circle. And it's an honor and a pleasure to have her. So make sure you guys contact her, blow up. And yeah, look at the comment section, Anna. It was really good. Thank you for today.
I want to look at it. I don't know how to, I see it in the chat. I'm like, how do I look at that? Thank you.
Bro, I love your transparency. I love it so much. Does anyone have any final questions, or Anna, do you have any final thoughts for us?
You know, I just, you know, I'll let everyone know, like for me, it's like, whether it's myself or like anyone else, like I always tell my team, like, the more you know, the easier it is to talk to people, especially like for me, we host a lot of open houses. So I do think like the more you know, the more you're able to share. And I feel like when people talk to you, especially if they're inexperienced, they don't want you to just be like, okay, come on, I'm gonna help you buy a home. Like the more you share with them without expecting anything in return, the more you're gonna be able to increase the chances that you're actually gonna be their realtor or like their lender. So I would say, you know, like, well, of course, you know, if you want to work with me, I'll be more than happy to do so. But if not, just make sure that you know, that you're getting trained by like your loan officer or your mortgage lender that you're working with, because it is important. Like there's a lot of more requirements, you know, to actually get someone into these loans. But knowing the very basics, or like what kind of programs can be for what type of person or who it would be a good fit with, is something great to know, just like the basics of it. And I'm here to help. So if you guys have any questions, you can always send me a text message, a DM on Instagram. I'm here to help.
What's your Instagram and what's your phone number?
So I'm A-Rod the Lender on Instagram, and then my cell phone is 323. Maybe I should put it on the chat too. 803-0627.
Are we done with the questions? Like, we just keep asking.
I do have a question.
So actually, sorry, really quick, Gabe. Do you want to continue like with the questions, because I know it finishes at 11, or do you want me to finish?
We have a couple of minutes. Yeah, we have a couple of minutes, so go ahead and answer a few. We just have a hard stop at 11. But if you guys, for those who don't have any more questions, please reach out to Anna. For those who have questions, stay on the call. We're going to have her back in a couple of weeks so that she can continue educating us on these loan programs. So whoever has questions, stay on. If you don't, thank you for being here.
Thank you, guys.
I do have a question. I was gonna ask for people that have ITIN loans. For people that have ITINs and they are business owners, are they able to, obtain, a loan that's maybe like a bank statement loan?
Yes,
Without having to do too much of the down payment and be able to do like the minimum?
so they could, but so the minimum is going to be like 15, and if you go with bank statements, sometimes they will require 20, like they won't let you do the 15. But for self-employed, actually that's perfect that you touch that subject, because that's the last slide that I put up on the screen. So when someone's self-employed, they can get a regular FHA loan, a regular conventional loan. We have 12 and 24-month bank statements. They have like profit and loss statements. And for people with ITIN, their options are going to be either full doc, meaning tax returns are used, or bank statements, but both are available. The down payment requirement that I personally have access to right now on ITIN is 15%. I'm always like very transparent. So I have heard that people say that there's like a 5% available right now for ITIN loans. We've been looking into it and we can't really find like a true source for it. So I don't know if that's, something that is really closing, but I know for sure, like me personally, I have closed 10, 15, and 20% on down payment for ITIN loans.
Thank you.
Yeah, of course.
What's the
Amazing.
best route to qualify a client if they have a lot of mattress money? They have an I-10. I know that for I-10 is like you said, 15% down. But what if you do kind of like a verification of employment where they can go as low as with a 3.5? But then how do you go with all that money they have under the mattress?
So you're talking about like mattress money, but not related to
I-
someone with ITIN, or are you saying like both combined?
Related to someone with I-10.
Related with
They don't deposit anything. They get paid in cash and they just stash it at home.
So two separate questions, right? So I heard you mention like with the like VOE or like a low down payment, like those won't be available for I-10. Now when it comes to like mattress money for I-10, that is very common for people to, have mattress money, and they will be required to have that money in the bank for about 3 months before they start the transaction. So the requirements for I-10 are more strict than like on your regular FHA or conventional loan. Does that answer your question, Juan? Okay.
Yeah, it's good. It's just there's a lot of thoughts into that, but I guess it just depends on different scenarios. It's like putting a puzzle together,
Yeah.
just getting to see which way fits better. And
That's
like their
exactly what it is.
situation, and they're like the swagger comes in, and then she's got an opinion, and then the other guy's got and yeah, just trying to work it all out. But yeah, that's very helpful. 3 months ahead of time before they can start purchasing.
That's right. And then, does anyone have any other questions? Not necessarily only about ITIN, but even if you have any questions about any of the other programs that we discussed.
Yeah, even if you guys don't have any questions right now, because we will have Anna back 2 weeks from now, mark your calendars. We will definitely send you guys the reminders as always. But from now until then, we posted her Instagram. She put her number. Take your questions down, reach out to her directly, or write them down and save them for our next call so that you guys will definitely have the opportunity on the next call to get those questions answered. But thank you so much, Anna. You were incredible today. I had so many
Thank you
takeaways.
guys so much.
I think the biggest takeaway for me was definitely not knowing this whole time that for VA loans, that the buyer can't pay or the veteran can't pay for the termite, which is crazy. I didn't know that. So thank you so much. I know we have a lot of people here in the chat who said it was also very helpful. So we will be more than happy to welcome you back not this next week, but the next week. And yeah, do you have any final closing thoughts for us before we wrap up?
So yeah, of course, this is me, like personal guys, remember that brokers are better, okay? So seriously, I do want to let you guys know, like, if you guys do have any clients that you've dealt with in the past that were going through like your traditional Chase, Bank of America, or like a credit union, I can't emphasize enough how much they might have been denied, though they truly do qualify through regular, through like a brokerage, because we go based on financing, strict requirements, whatever government's required, and not putting our own overlays on it. So definitely keep that in mind, because I can't tell you how many deals I've closed, a lot from B of A, don't publish this, that they will deny them, and then with us, they qualify without any hiccups. So, you know, it is important to know that all banks are different. They could have their own requirements. So just because your client didn't qualify with X bank doesn't mean they can't try again and get like a second opinion.
Awesome.
Thank you guys all so much for your time.
Thank you, Anna. Thank you, thank you, thank you. We will see you. Well, we'll see everyone next week, because regardless, we'll still have another call next week.
We'll
But
see you
Anna,
guys
we'll see
then.
you in 2 weeks from now. Have a good day, everyone.
Bye. Have a great day.
Bye.